Welcome to the first free lesson of our Multibagger investing course. I am Zafar and I am thrilled to have you here as we embark on this exciting journey together. In this introductory lesson, we'll be diving into the powerful philosophy of price action investing, a key strategy for identifying multi-bagger stock. We will be laying the foundation for your understanding of multi-bagger stocks using price action. Price action investing focuses on understanding and interpreting the movement of stock prices rather than relying solely on financial metrics and fundamental valuations. By observing price trends, patterns, and market behaviors, you can gain unique insights into potential high growth multibaggers. In this lesson, we'll explore the fundamental principles of price action investing and how you can apply this approach to uncover stocks with the potential to deliver extraordinary returns. You will learn how to read charts, recognize significant price patterns, and make informed decisions based on market movements. By the end of this lesson, you will have a solid foundation in price action investing and be well equipped to start your journey towards finding multi-bagger stocks. So grab a notebook, settle in, and get ready to unlock the secrets of market through the lens of price action investing. Let's dive in and start discovering price action secrets of multi-bagger stocks.
I will first start with the program objectives. So this program is about, there are two things in it. First is investing. So we are looking for a investing system. It's not a short-term trading or F&O system. Although the same concepts along with additional tools and techniques can be used on short-term time frames. But the main purpose of this program is investing. Whatever stocks we identify using this technique, until the stop loss is triggered, say if the stop loss is triggered immediately in month or two, then we will be exiting in 1 month or two. But otherwise, the purpose of this investing style is to identify the stocks which we can hold for minimum next 12 months. Because based on the research that we have done, we have understood that the trends as per this system go on for on average 2 years, and it can extend more than that also. So the holding period is going to be more than 12 months. Second thing, it is investing, but the primary component of investing is using charts. Okay, so all my market career has been developed and dependent on using charts, because I believe that price is much more reliable indicator than any news flow or any fundamentals. And secondly, we make our money only if price moves. So if you identify some great company and you invest, but if the price is not moving, so it is not going to give us the return. So I have focused only on the movements of price, and then try to use longer term charts to identify the opportunities for investing. So these are the two core components of this module. One is investing for long term. Second is using charts for investing. This is not a fundamental kind of detailed deep dive. So if anybody is expecting to know the fundamental investing in detail, then they will be disappointed. We have module on fundamentals because I started as a fundamental investor. So we have a module on fundamental, but that is hardly 10% of the system. 90% of the system is based on chart. So what all we are going to learn in this program? First of all, understand stock market cycles. So all of you who have been more than 5 years in the market must have seen stock market cycles. There is something called Benner cycle, which tells us that every 8 to 10 years there are major peaks in the market, and every 8 to 10 years there are major recessions in the market. In that 8 to 10 year period also, there is a period of 4 years. So in 4 years we see one intermediate peak and one correction also. So this is the part of market cycles. We will understand how these cycles work at index levels. Secondly, we will learn to identify long-term stock trends. So trends are persistent, and they go on for, once the trend is started, it goes on for long time. Whether in some cases fundamentals do match with the trends, like if there is earning growth, then trends develop. In some cases there are trends without any fundamentals. So many stocks are like this. They will go through boom and bust cycle. From 100, it will go to 500, then again come back to 100. So these kinds of stock trends are also there in the market, and we can make use of both these trends, whether it is driven by fundamentals or whether it is driven by technicals and emotions. Third point, as one of the participants said, that sometimes we become panicky when the stock crashes. So during the trade, as I said, it is not a one-way street. When we are talking about investing in stock for long term, there is going to be a lot of volatility, and every volatility poses question whether it is end of trend or whether it is just an intermediate correction. So the tools we have developed, that will give you understanding of how much the stock can be volatile during the trend. Okay, so that we can peacefully sit through with our stock holding or portfolio when there is a market correction or when the stock suddenly becomes volatile. Then fourth point is learn systematic and objective investing process. So there are various ways to operate in market, and most of the new people who are into market, they go by emotions, gut feeling, news, tips, everything. In the long run, this kind of process doesn't work. You must have seen this statistics of traders. Basically, one is report by SEBI, second is by founder of Zerodha, Mr. Kamath, that 90% of the short-term traders or option traders in market are loss making. So the simple reason is that they don't have a well validated, well tested, systematic and objective decision making process. The decisions are swayed by emotions. So that kind of system doesn't work in the long run. What we want is basically a rule based system in which for every step of the decision making, the rules are clearly well defined. What are those rules? Making key investing decisions. So there are only 4 or 5 rules basically when investing in the stock. First is you have to identify the stock, which stock you want to invest. Second, you have to identify the entry point, where to invest, enter into that stock. Third, if the stock doesn't work out in our favor, then we call it as initial stop loss. So where to put that initial stop loss, or where to take a call that this stock is not working in our favor, and take an exit from that. Fourth is the profit booking exit, that all the trends at some point of time they mature, and either they will go in sideways mode or they will keep on coming down. So we need to optimize that exit using some kind of tools which will give us clear rule that now we have to exit. Fifth, building a portfolio of multiple stocks. We cannot be dependent on 1 or 2 or 5 stocks. We need sufficient diversification so that our portfolio is able to basically tolerate the market volatility. And for that, we have to learn the decisions of portfolio construction. So in that, there are 3 principal decisions. One is how many stocks to have in portfolio. Second is how much capital to allocate to the stock. And third is rebalancing it. So if some stock is going out of the portfolio, then when we replace, how much allocation to do that for that particular stock. So these are the key investing decisions while constructing the portfolio, and we need to have clear and objective rule for each one of them. Then basically, to the purpose of doing active investing is creating a high CAGR portfolio. So our objective is simply to match with the index. Then there's no need to do active investing. We can just go for index fund and do passive investing. Whatever the index gives return, we will get it. But the single most component for wealth creation is CAGR. So if your CAGR is higher, then the wealth creation will be faster. So the purpose of this particular program is to create a portfolio which will beat index, which will beat mutual fund, or which will beat other modes of active investing. Then rebalancing of the portfolio, I already talked. So when the stock goes out, what should we do? How we should add new stocks into the portfolio. Then understanding the stock market cycles from valuation perspective. So how to identify overvalued and undervalued markets. So this is basically a tactical call, that if market is too overvalued, like it happened in 2008 or it happened in 2018. So how to identify those phases of extreme euphoria, and if we have to take a call to shift to other assets, like if there is market is highly overvalued, then it is better that we add some other asset like gold or debt funds into the portfolio and reduce the exposure to equity, so that we are not participating in the down cycle of the market. So that is one of the objective, to identify overvalued and undervalued market. And the last point I already spoke, strategic and tactical asset allocation. So how much to allocate to the equity, how much to allocate to the other assets, and then how to switch between these asset classes. These are the program objective. Now, when I said that this is chart based program, so obviously there is a component of technical analysis in it, but this program is not general technical analysis. Technical analysis is very vast subject. There are hundreds of tools and techniques in technical analysis, like averages, trend lines, indicators, candlestick patterns, chart patterns, continuation and reversal patterns. So these are very, my experience is that these are very basically subjective techniques, and unless and until we are able to objectively use these techniques, it doesn't help. So we are not going into deep technical analysis. There are certain components of technical analysis which I have found that they helped us in the critical decision making of investing. So only those tools we are going to study in detail. So it is detail, objective and systematic strategy with clear rules. So I am going to give you a detailed strategy for investment, not the general market analysis kind of techniques. Okay. What basically made me to stay away from investing in initial years was global financial crisis. You know, everyone knows that in market 2008 market corrected very badly. Most of the portfolios were decimated to around 50-60%, and small cap stocks were battered down to around 80-90% level also. And that in that period I was still doing my F&O activity, but I experienced that kind of market drop and that kind of correction in the stock prices, and it made me very nervous to have allocation to investing, and I kept trading only. It kept me away from investing. My investing trigger basically happened in 2014. So right from 2007 till 2014, I was mostly dealing into short-term trading in F&O and not doing much of investment. But what happened in 2014 is basically from 2013 till 2008 till 2014, market was in sideways kind of mode, you can say. So we'll just have a look at chart. So here is the Nifty chart, and you can see there was a top in 2008 when this global financial crisis started, and index itself dropped around 60%. And after that, the market was sideways, although there were small pockets of activity in the investing space, but most of the market was sideways. So I was just happy doing small trading and capturing this movement. And then in 2014, basically, the market started to rise. It gave a breakout. And from there, the bull market started in small cap stocks. So what happened in that phase, basically, 2014, when this breakout of market happened, that time also my system was short term. I had started doing cash stocks, but again, because I had a short term approach, I was mostly looking at daily time frames. And in daily time frames, the trends last for around 4 or 5 weeks, and after that, again the trend basically stops and reverses. So I was just looking at those small movements, and I will show you the activity in 2014. So this is my P&L from 2014-15. So I traded lots of stock, but in that there was no stock basically which I kept on holding for multi-bagger kind of return. So I was entering and 20-30%, either it was going exiting at stop loss, or I was exiting when I got 20-30% kind of movement. And I was happy with that. But what happened is that after this 2014, at the end of the financial year, so I looked at the stocks which I had traded, and the thing is that I saw that the stocks kept on going higher and higher. So stock kept on going higher and higher, and I saw that the stock which I had bought at 50 and sold at 80, now it is trading at 100, 200, and that led me to regret basically. And then I had lots of questions basically. So how can I hold on to these stocks which are giving 100%, 200%, 300 kind of returns? And since my skills were developed only on daily time frames and short-term movements, so then I started to ask questions that I have been successful doing technical trading on shorter time frames of daily. But these technicals, do they play a role in longer term trends, like the stock which goes from 50 to 100 or 200? So can we identify that using longer term trends? And there is a continuous volatility in the stock. So 4 weeks it will go up, 4 weeks it will come down, again it will go up. So is there any kind of structure to this price volatility and fluctuations on the longer term time frame? And for that, what I did basically, so I had learned this from my engineering days of doing reverse engineering. So if you want to find out something, just break it down to the basic level and try to understand what we can learn from that. And what I was trying to look is there a common and repetitive pattern where we can identify these kind of multi-bagger stocks? So what I did, before the period of 2014-15, I identified hundreds of multi-bagger stocks which had given more than 100%, 200% kind of returns. And then I opened those chart and I looked at each and every chart whether there is a common and repetitive pattern on that. And this time, what I did different was that instead of just looking at daily chart, I started to look at weekly and monthly charts as well. Okay, so all these hundreds of charts I opened on weekly time frame, I opened on monthly time frame. And what I started to analyze that when this big movement starts, says the stock has bottomed at 20 rupees and it went to 200 rupees. So what were the technical conditions when it was at 20 rupees and what were the technical conditions when it was at 200 rupees? So I studied technical condition as start of big trend and studied the start and end of trend, where the trend has started, where the trend has ended, and what are the technical conditions on weekly and monthly time frame charts. And then I also studied the volatility of that stock during that journey. And then I had my basically breakthrough after observing these hundreds of charts. So how we can identify these kind of multi-bagger patterns? There were two components for their entry. One was the time frame. So just going from daily time frame to not even weekly. If you want to identify the multi-bagger, then we have to go to monthly time frame, and even higher is a quarterly time frame. So there were stocks, particularly in the phase of 2003 to 2008 bull runs, which became 100-bagger, 200-bagger, and the technical condition for them was just looking at the signal on quarterly time frames. Quarterly time frame chart is basically 3-month chart. Those people who are not familiar with charts and technical analysis, and if they are not understanding any of these concepts, basically, don't worry, we have a first session on technicals for people who are new to the charting and technicals. Okay, so that time these things will be more clear to you. So first was that we have to look at monthly and quarterly chart. Second, the repetitive pattern for entry is moving average crossover. Now, some of you may be wondering or laughing, what is it, just moving average crossover? And are we sitting here for this moving average crossover? So is it enough? It is not enough. It is just a first component discovered of this strategy. One is the time frame we have to see, and second is the signal which generates the entry for this stock. Okay, there are lots of problems with MA crossover. We will deal with that in detail later, but this is important signal. So what I observed a particular moving average combination, which when activates, it gives this kind of multi-bagger movements to the stock. Okay, I had to further fine tune this strategy. Only this component is not enough, but this is one of the trigger. So what I did is that at the end of 2014, when I discovered that this is the important trigger for stock to become multi-bagger, then I identified the stock which has given this particular type of signal, and then I just created a paper portfolio of that. Okay, so were lots of stock, around 80 or 100 stocks, which had given this signal on monthly time frame. Okay, and then I created a paper portfolio and I forgot about it. I just wanted to check what happens in the long run. Sometime in 2016, I opened this portfolio and I checked what happened after that signal. So this is that portfolio I'm sharing with you. This was created in 2014, around March of 2014. Okay, and I reviewed it in 2016. That is, the duration was 2.26 years. That is like 2 years and 3 months. After that, I checked these signals, and I was totally shocked and surprised to see the kind of movements that were generated on these stocks. Okay, so here you are seeing the returns of that stock in this 2.26 years of time frame, and you can see the percentage return. Some of them have given humongous return, but not only this outlier stock. If you look at the general portfolio return, so then I look at what is the portfolio CAGR. This annualized return means CAGR of the portfolio. So in this 2.5 years, what is the CAGR of the portfolio? And it is 67%. And what is the annualized return at peak price? When, because I was not looking any exit strategy here, I was just checking the rates after 2.5 years. And if we had taken peak price, then the return were something like 96%. So almost on average, almost every stock has doubled in that 2.5 years of period. Okay, returns are high, but how do you know these returns are good or not? So I compared this return with the mutual fund return in the same period. So it was, I checked on small cap mutual funds and mid cap mutual fund, what is the return? And I noticed that if we compare point to point return, like this is my start date and this is 2 years, 3 months end date, what is the return? So most of the mutual, like best of the mutual fund had given 30 to 35% return, not more than that. Whereas if you look at the return of this portfolio, it is like almost 67. So it, what basically made me to stay away from investing in initial years was global financial crisis. You know, everyone knows that in market 2008 market corrected very badly. Most of the portfolios were decimated to around 50-60%, and small cap stocks were battered down to around 80-90% level also. And that in that period I was still doing my F&O activity, but I experienced that kind of market drop and that kind of correction in the stock prices, and it made me very nervous to have allocation to investing, and I kept trading only. It kept me away from investing. My investing trigger basically happened in 2014. So right from 2007 till 2014, I was mostly dealing into short-term trading in F&O and not doing much of investment. But what happened in 2014 is basically from 2013 till 2008 till 2014, market was in sideways kind of mode, you can say. So we'll just have a look at chart. So here is the Nifty chart, and you can see there was a top in 2008 when this global financial crisis started, and index itself dropped around 60%. And after that, the market was sideways, although there was small pockets of activity in the investing space, but most of the market was sideways. So I was just happy doing small trading and capturing this movement. And then in 2014, basically, the market started to rise. It gave a breakout. And from there, the bull market started in small cap stocks. So what happened in that phase, basically, 2014, when this breakout of market happened, that time also my system was short term. I had started doing cash stocks, but again, because I had a short term approach, I was mostly looking at daily time frames. And in daily time frames, the trends last for around 4 or 5 weeks, and after that, again the trend basically stops and reverses. So I was just looking at those small movements, and I will show you the activity in 2014. So this is my P&L from 2014-15. So I traded lots of stock, but in that there was no stock basically which I kept on holding for multi-bagger kind of return. So I was entering and 20-30%, either it was going exiting at stop loss, or I was exiting when I got 20-30% kind of movement. And I was happy with that. But what happened is that after this 2014, at the end of the financial year, so I looked at the stocks which I had traded, and the thing is that I saw that the stocks kept on going higher and higher. So stock kept on going higher and higher, and I saw that the stock which I had bought at 50 and sold at 80, now it is trading at 100, 200. and that led me to regret basically. And then I had lots of questions basically. So how can I hold on to these stocks which are becoming giving 100%, 200%, 300 kind of returns? And since my skills were developed only on daily time frames and short-term movements, so then I started to ask questions that I have been successful doing technical trading on shorter time frames of daily. But these technicals, do they play a role in longer term trends like the stock which goes from 50 to 100 or 200? So can we identify that using longer term trends? And there is a continuous volatility in the stock. So 4 weeks it will go up, 4 weeks it will come down, again it will go up. So is there any kind of structure to this price volatility and fluctuations on the longer term time frame? And for that, what I did basically, so I had learned this from my engineering days of doing reverse engineering. So if you want to find out something, just break it down to the basic level and try to understand what we can learn from that. And what I was trying to look is there a common and repetitive pattern where we can identify these kind of multi-bagger stocks? So what I did, before the period of 2014-15, I identified hundreds of multi-bagger stocks which had given more than 100%, 200% kind of returns. And then I opened those chart and I looked at each and every chart whether there is a common and repetitive pattern on that. And this time, what I did different was that instead of just looking at daily chart, I started to look at weekly and monthly charts as well. Okay, so all these hundreds of charts I opened on weekly time frame, I opened on monthly time frame. And what I started to analyze that when this big movement starts, say the stock has bottomed at 20 rupees and it went to 200 rupees. So what were the technical conditions when it was at 20 rupees and what were the technical conditions when it was at 200 rupees? So I studied technical condition as start of big trend and studied the start and end of trend, where the trend has started, where the trend has ended, and what are the technical conditions on weekly and monthly time frame charts. And then I also studied the volatility of that stock during that journey. And then I had my basically breakthrough after observing these hundreds of charts. So how we can identify these kind of multi-bagger patterns? There were two components for their entry. One was the time frame. So just going from daily time frame to not even weekly. If you want to identify the multi-bagger, then we have to go to monthly time frame, and even higher is a quarterly time frame. So there were stocks, particularly in the phase of 2003 to 2008 bull runs, which became 100 bagger, 200 bagger, and the technical condition for them was just looking at the signal on quarterly time frames. Quarterly time frame chart is basically 3-month chart. Those people who are not familiar with charts and technical analysis, and if they are not understanding any of these concepts, basically, don't worry, we have a first session on technicals for people who are new to the charting and technicals. Okay, so that time these things will be more clear to you. So first was that we have to look at monthly and quarterly chart. Second, the repetitive pattern for entry is moving average crossover. Now, some of you may be wondering or laughing, what is it, just moving average crossover? And are we sitting here for this moving average crossover? So is it enough? It is not enough. It is just a first component discovered of this strategy. One is the time frame we have to see, and second is the signal which generates the entry for this stock. Okay, there are lots of problems with MA crossover. We will deal with that in detail later. But this is important signal. So what I observed a particular moving average combination, which when activates, it gives this kind of multi-bagger movements to the stock. Okay, I had to further fine tune this strategy. Only this component is not enough, but this is one of the trigger. So what I did is that at the end of 2014, when I discovered that this is the important trigger for stock to become multi-bagger, then I identified the stock which has given this particular type of signal, and then I just created a paper portfolio of that. Okay, so were lots of stock, around 80 or 100 stocks, which had given this signal on monthly time frame. Okay, and then I created a paper portfolio and I forgot about it. I just wanted to check what happens in the long run. Sometime in 2016, I opened this portfolio and I checked what happened after that signal. So this is that portfolio I'm sharing with you. This was created in 2014, around March of 2014. Okay, and I reviewed it in 2016. That is, the duration was 2.26 years. That is like 2 years and 3 months. After that, I checked these signals, and I was totally shocked and surprised to see the kind of movements that were generated on these stocks. Okay, so here you are seeing the returns of that stock in this 2.26 years of time frame, and you can see the percentage return. Some of them have given humongous return, but not only this outlier stock. If you look at the general portfolio return, so then I look at what is the portfolio CAGR. This annualized return means CAGR of the portfolio. So in this 2.5 years, what is the CAGR of the portfolio? And it is 67%. And what is the annualized return at peak price? When, because I was not looking any exit strategy here, I was just checking the rates after 2.5 years. And if we had taken peak price, then the return were something like 96%. So almost on average, almost every stock has doubled in that 2.5 years of period. Okay, returns are high, but how do you know these returns are good or not? So I compared this return with the mutual fund return in the same period. So it was, I checked on small cap mutual funds and mid cap mutual fund, what is the return? And I noticed that if we compare point to point return, like this is my start date and this is 2 years, 3 months end date, what is the return? So most of the mutual, like best of the mutual fund had given 30 to 35% return, not more than that. Whereas if you look at the return of this portfolio, it is like almost 67. So it, okay, so this is the kind of portfolio return it was generated. Now we are not interested in individual stock. The purpose of this system is that at the portfolio level, we should be able to beat mutual fund. We should be able to do beat active investing. And then I got interested in this system to develop more. Obviously there are losers, but you will see that the losers are very less. The percentage losses are also very less. Okay, and the gainers were huge. So even if you have 1 or 2 or 3 stocks like this, one of the top 3 or 5, then it will compensate for all the losses in the portfolio. So moving average crossover, what are the problems with moving average crossover? So this was the early indicator, but this is not enough. So what are the problems? I discovered that this is not a strategy in itself, because it leads to many false signals. So if you just act on all the moving average crossovers, you will find that many of them will just give you the signal and the price will completely reverse. So basically, when everyone comes into the market, they are mostly looking at entry signals. Entry signals is a big focus area where I can get an entry signal. But these signals are overrated. If you take any indicator in technical analysis, it is going to give you signals on all time frames. On daily time frame, it will give signal. On weekly, it will give signal. But not all the signals will give us the favorable results. So generating signal is overrated. What we need is basically that after giving the signal, there should be follow-up. There should be follow-up movement. Like if I get the entry signal at 100 rupees, then in longer term investing, we are looking at that the stock should go at least till 150, 200. Okay. If it just goes to 120 and reverses, what is the use? So that's why we need follow up after that signal is generated. And for that, we need filters. Okay. So what is basically filters? So filters is basically the conditions which enhance performance of a signal. So let's take, I got a 10 moving average signals. Now out of these 10, on which signal should I act? Okay. So you can filter out those signals, and maybe after filtering out, you will have 3 or 4 moving average signals on which you have to take action. Okay. Because they are going to give us the follow through movement. And how you are going to qualify this? So that was the second stage discovery of this basically investing process. So as I keep on studying the charts, and as I studied more and more charts, more filters were added. Okay. So what are the filters that were added to refine these signals? One is fractals. Fractals is basically candlestick formation, a specific formation. Some people call it as pivot also. Okay. So we will learn about fractal, what is fractal and how to make use of those fractals in filtering out these signals. Second is ATR. ATR is a technical indicator. The full form is average true range. It is a volatility indicator. It tells us about how much a stock moves in specific period. Like if we take daily ATR and the ATR value is 10 rupees, then we get a feeling that on average this stocks makes a movement of 10 rupees on a daily time frame. Okay, and that gives us a very critical component to developing our stop losses and to understand the volatility, how much stock is going to fluctuate, what is the normal fluctuation of this stock, what is the personality of this stock. Third component is Keltner channel. Keltner channel is a combination of moving average and ATRs. If you just plot Keltner channel on charting application, you will not be able to derive much use from it. I played with lots of parameters on Keltner channel, and then I realized a certain combination of parameters which basically gives you a clear-cut idea what is the trend, whether it is an uptrend and downtrend, and how much the stock is going to fluctuate. So entry signal is moving average, but Keltner channel is the heart of this strategy. And how to use that Keltner channel, we are going to study in the next technical sessions. Then another filter was correction speed. So what I observed is that there are certain stocks because of some fundamental trigger or something, they just drop vertically like 80-90% of the correction in 1 year because there is some fraud, scam, cooking of accounts or something like that. If this kind of stocks give us buy signal, then I observed that most of the time that signal doesn't work because the correction speed was so high, the people were trapped and they were not able to get out of the that particular stock within time. And so whenever the stock tries to rise, it creates the overhead resistance and it invites selling, and that's why it doesn't give the favorable result. So correction speed was one of the filters. Then volatility. So when this basically structure is created for entry, so if it is very volatile, that means neither the buyer nor the sellers are in control. What we want basically from investing perspective is that the buyer should be in control. And how to identify that? So when the big buyers are accumulating a stock, it generally is not very volatile. They will keep on accumulating in a range and the volatility will keep on contracting. So that was one of the filters that was used to qualify these signals. And the next filter was cycle higher high. So when we study the cycle, you will understand what is the cycle higher high, cycle higher low. Okay. So the signals which were generated when the stock was in higher high kind of cycle formation, those signals work generally better than the stocks which are making a lower low kind of structure. So these were the filters added. Each and every filter we are going to study in detail. These are the technical tools on which we are going to focus because these are the technical tools which are used on our in our strategy. Although I am having a session on technical analysis, but that is a general session for people who don't have any idea of technicals to just to get them the idea of technicals. Okay. But we are not going to cover in that in detail. What we are going to cover in detail is these filters and the signals and the technicals that are used in our strategy. So using this knowledge of 2014-15 that these are the triggers, what I did basically is that I started to invest for a longer term, and then I had my first 10 bagger stock. There was lots of temptation to basically exit at various level, but somehow I was able to hold, and that was my first achievement of having a 10 bagger stock. I will just show it to you. So it's from textile segment. And this was the stock which I had identified in 2014, and here there was many months where it didn't do much, but then because there was a signal, I kept on holding it, and I invested around the average price of around 33, and luckily I was able to exit somewhere. That was by pure stroke of luck. Suddenly, because of the corporate news, it jumped, and then I was able to exit somewhere around 500. So this may look kind of perfect exit, but in reality, on most of the stock, we don't get perfect exit. We have to be happy with whatever we get. So this was my first 10 bagger stock. Then using the same technique, I was able to identify some more multi-baggers like Range, Giant, Merck, Jindal Worldwide. I'll show you some of those charts. So this was Rain Industries, and in this 2016-17 cycle of basically carbon stock and graphite stock, there was a rally of HEG, graphite. So I was able to invest in this. I invested around the rate of 46, and within around 1 year itself, it went to around 300 and 350. The entry signal was common. It was just a moving average crossover, but it needs additional filter so that we don't get whipsaws. Then I had a stock called Merck. It has been renamed to PGHL or something. Yes, this was the stock PGHL. So I bought this in 2016 around the rate of 600, and when it became 5 or 6 back at around 4,000. So this was the time when basically the market stirred, and other stock from my portfolio started to give negative returns. So even without checking the condition, I just exited from this stock, which made 5 or 6 bagger kind of returns. Then there was one company called Jain Agro Organic. So here again, I got the signal in 2016 at the rate of 70, and from there it gave one way movement of around 400, 445. Okay. So these were some of the there were many, but just to give you examples, these were the stocks which I was able to catch using this system. Then in 2018-19 period, so why my system got more heavily oriented toward technicals was the missed opportunities because of the fundamental criterias. So my system identified that these are the stocks which we should invest. But I had a friend who is a very good fundamental investors, and some of those stocks I passed through him that how are the fundamentals looking, and his reply was the fundamentals are not great. So I passed on those opportunities, but just from the technical trigger, it had given me signal that this can have multi-bagger movements, and they actually gave multi-bagger movement, but I didn't participate. I will just open 1 or 2 charts out of that. So there was a stock called Goldiam. Okay, and this had given signal in 2019. So here you can see there is a moving average crossover, and then the fractals and Keltner channel gave signal of 16 rupees. It gradually went up. In COVID, it came down, and then again it started to rise, and it went all the way to 200. Then there was a stock called Gujarat Themis. So here also it gave the crossover, and after adding fractals and Keltner channel, it gave the buy signal around the rate of 41 rupees, and it kept on rising non-stop. But the fundamentals when entering were not so great as per my friend who had told me. So then I passed these opportunities, and then I realized my basically mistakes that fundamentals develop over a period of time, and it is not necessary that when we are entering into any stock, the fundamentals will be great at that time. It may evolve later, but just to miss that opportunity is not a good thing. Then in the small cap cycle, basically it turned in 2018. So most of the people see that Nifty has topped out in 2020. But who track the market in detail will know that actually the market turned in the January of 2018. The broader market peaked, the mid cap and small cap index. And even the Nifty equal weight index peaked in 2000. Nifty basically index has been, methodology has been changed to different kind of methodology post 2010. So there the Nifty topped in 2020, but equal weight Nifty topped in 2018. And then a lot of stock I had basically started to correct, and I was just focused on identifying entries. I didn't know how far the stock can go, or where the cycle turns, or how to exit. So that was the learning, and that actually led to development of the exit system, that the way we are looking for entries, can there be a criteria where we can have exit for these longer term trends, or monthly trends, or quarterly trends, which tell us that the cycle is over and now it is better to get out. Okay, so that led to the development of exit system. Exit system has basically two components. One is that if we keep on waiting for reversal, then lot of gains may get evaporated. So what we can do is basically sell into the strength. So when there is a lot of euphoria, if we try to match some technical condition with that, and that time we try to sell, so that also can give us the exit, and that actually led to discovery of Keltner channels. So when I said that I fine-tuned these parameters or played with different parameters on Keltner channels, so that was after learning these lessons of exit. So I tried with various combinations on Keltner channels, and I discovered that there are certain conditions which can basically tell us that the trend is over. Now it is better to get out of the stock. So after this system was almost developed, then but this 2018 kind of experience was still haunting me. So when this rally post COVID rally started, and again as per my system in 2021, when I started to observe that market has started to become overheated. Okay, so then in real market, I wanted to test this strategy, that what happens basically when the market becomes sideways or market goes in correction. So at the end of June 2021, I just created a blind portfolio where I have not checked fundamentals, I have not checked market cap of that stock, I have not checked management quality. I just check the signal as per the system, whether the signal is active or not. And I created a random portfolio of 40 stocks. I wanted to check that when the market is bad, how this portfolio is going to perform. Okay, so I will just show you the portfolio performance here. So this was the portfolio created at the end of the June 21, when it was looking like market was overheated, market was becoming overheated. And actually market topped out in 2021, October 2021. So after this portfolio was created, in next 3 months, the market topped out. And I just made a portfolio of 40 stocks based on the entry conditions and the filters. And then I kept tracking this. So this is the performance till last week. So you can see during this period, when this portfolio was created, Nifty was at 15,700 level, small cap was at 907.30 level. And what are the gains from that day? So Nifty has given 17.5% return, small cap index has given 5.5% return, whereas this portfolio, it is a totally blind portfolio without checking. I have not even opened the company's website or company's name. I just created a blind portfolio, and this portfolio has given the return of 50.24%. And then I compared these returns with the mutual fund returns. So hardly I could see any mutual fund which has beaten these returns point to point. That means from June end 21 till June 2023. Okay, so in 2 years, not many mutual funds, like 95 to 99% mutual fund have not given this kind of returns. So how this portfolio looks like, again, there are going to be outliers. So if you look at this top 4 stock, they have become multi-bagger in this market environment of last 2 years, where small caps were not going anywhere, Nifty was flat. And these 4 stocks have gone on to become multi-bagger. Then there are many other stock which has given decent returns. And there are stocks which has given negative return because the market conditions were bad. Okay. Now what I have not done in this portfolio is that I have not added any fresh stock. So how I monitored this portfolio, whenever the exit is triggered as per the system, I just recorded that exit price and marked it as a loss. No new stocks were added. If I had added new stocks in as a replacement for the stock which has gone out of the portfolio, then the portfolio performance could have been even better. But without doing that, we have got this kind of return. I will share this presentation, will be available as a form of recording. And if you need any documents which are shared in the presentation, you can just message me. I will share all those documents with you so that you can look it at your own leisure. Okay. So this gave me more confidence that the technical signals can basically give better returns than the index, better returns than mutual funds. And there's no so some people might be asking why not much focus on the fundamentals. So this is the reason. that everybody has different approach. My primary approach is that I want a high CAGR portfolio and I want price to be in my favor. Okay. So I want to be in those stocks which are giving me fast and high price movement, rather than be focused on companies which are fundamentally fantastic. Their everything is perfect, but the price is not moving. So that is not of use for me. So this portfolio basically outperformed most of the mutual funds. And these were the key learnings for me while developing the system. So this is basically 7-8 years of my work, which I'm sharing to all you guys as a system. Some people say that if you share a system, the age is taken away, but this is not a short-term kind of trading system where the age is going to be taken away. So it's an investing system. Once you enter the stock, you have to hold it for 1 year, 2 year, and in that period many people will come in that particular stock, many people will go. So it doesn't take away any age. I wanted to give this system to people and grow a community of people who are basically using a technical kind of system for longer term investment. Because uh, I have been on social media and in market for over a decade, but I don't find that many people believe in this philosophy that technicals can be used for investment and technicals can be used for longer term portfolio creations. So I want to create this community who believes that the technicals can be used. So these are the key learnings during development of this system. One is that market cycles and trends are repetitive. Every 4 or 5 years, we have a new market cycle. Every 4 or 5 years, the stocks go through this boom and bust phase. So we should be able to take advantage of that. And not all these trends are driven by fundamentals. 80 to 90% of these boom and bust cycles are driven by participants' sentiments and emotions. So we can take, for example, if you take some of the stocks which were the market darlings of 2003 to 2007 cycle, there was Aban, then there was Unitech, Walchand Nagar, Jai Corp. Those people who are having more than 10 years of experience might be able to recall. If you don't know these stock names, just see what kind of movement they gave from 2003 to 2007 period. And after that, see basically what kind of price they are having right now. So it is a complete boom and bust cycle. Fundamentals contributed, but not in a big way. It was just a people's sentiment and emotions that these stocks are going to have wonderful times ahead. And those stock became 100 bagger, 200 bagger, 300 baggers. Okay. So this was my experience that these are basically repetitive cycles. Trends are persistent in the sense that once the trend is started, it keeps on going for longer time. So on monthly time frame, we have done this analysis. So average trend lasts for 2 years, that is 24 months. So 24 months, it will have fluctuations, but it will keep on rising till it reaches the stage of euphoria. So trends when develop, they are basically self-fulfilling prophecy. They keep on going. Multibaggers can be identified using only charts. I already shared examples with you that you just using technical conditions without knowing what is the name of the company, what the company does. Still, it can become multibagger and we can identify that using only charts. Filters make signal perform better. So just signal is not important. We need to add filters to that so that the signal performs even better and better. Fundamentals, if you are expert in fundamentals, how fundamentals can help in this strategy. So if there are say 10 stock identified using this strategy, then somebody having deep expertise in fundamentals may be able to filter out better stock from that 10 and it can enhance the returns. But as I have shown you with the past portfolios that it is not essential that you need to have full in-depth knowledge of fundamentals to outperform the index. Price based investing can outperform the index. Just if you focus on price and price trend, it still can outperform the index. And the exit system is not perfect. So the toughest decision, see, and I have through this process I have discovered that entries are very easy, exit is difficult. So exit system is not perfect, but it is very important so that we don't lose our time in the stock when its trend turns down. So I will share my experience in, there was one conference called DECMA in 2018. It is conducted by Define Edge. And that time, like Lupin was a multi-bagger from 2007-8 till 2014-15. But as per the system that we have discovered, the trend had turned for Lupin. Okay, but one of the star investor, Mr. Jhunjhunwala, was holding the Lupin stock. And when I was giving this presentation of exit system, I gave example of Lupin, and I told that this stock's trend is over. So after I did that, then there were a lot of passionate followers of Mr. Jhunjhunwala and passionate followers of Lupin also, who met me in lunchtime, and some of them started to abuse me. How you can say Jhunjhunwala is holding this stock? Do you know more than him? I said no. He's the star investor. He's the greatest of investor. But this is my system, and it has given an exit system on Lupin. Okay. So after that, that was 2018. Today is 2023. You can still see that Lupin is almost trading at the same price. Now it has given the fresh buy signal. But last 5 years, if you're holding, then you are, even if you are not, may not have lost on price, but you are lost on time, and time is basically opportunity. So this system has it at the heart of it. This system is price appreciation and time. Both the factors are important for high CAGR. We'll learn that later. Okay. So this is the program structure. This is the key learnings for me developing this process. Now I will take you this program outline. What are the sessions we are going to conduct? So first session is going to be technical analysis. This session is for people who don't have any brush with the technical analysis or charting, who don't know the charting, and who don't know what are the charting software and how to use this. So this is basic section for charting and technical analysis. Whoever has market experience in technical analysis and charting, and if they are confident of these skills, they can just skip this session. This is going to be on next Saturday. Those who want to learn about basics of technical analysis, they can join. Those who have experience and confidence in their technical abilities, they can skip this session. Okay, we are not going to showcase any indicators or tools in this. This is just the basics of technical analysis. Second session is going to be indicators and their interpretation. So from here, everyone should join the program. There are hundreds of indicators in technical analysis, but we are going to focus only on 6 or 7 indicators that we are going to use in the system. And each indicator has a role in this decision making process. So RSI has different role. It is for filtering the stocks which meet the condition. Then ATR has a different role. Keltner channel has a different role. It is for entering and to identify the stock volatility during the trend. Tricks is used to identify the cycles. Donchian channel is going to be used for pyramiding. Fractals is going to be a qualifying signal for entry. So we are going to talk only about these specific indicators, what is their role and how to interpret them in the second session. Then we are going to talk about CAGR and wealth creation. So ultimate aim is to have a high CAGR, faster wealth creation. Everyone is here for that. So what is the CAGR formula? In CAGR, there are basically two components. One is price and second is time. So importance of that time and price, and what are the key decisions we have to make in active investing for maintaining the high CAGR. Fourth session is going to be stock market cycles. So we'll understand the cycles, the theories of cycles and the tools used to identify these cycles. So one is going to be index cycles. Second is stock cycle. So there is a little bit difference between index cycle and stock cycle. Index cycles are not so volatile. Stock cycles are very, very volatile. We will understand the index valuations from fundamental perspective. So analyzing the index on fundamental parameters like P ratio, PB ratio, to identify basically overvalued and undervalued markets. Then we are going to use a lot of ratio charts. So even using ratio charts can give us the perspective of overbought and oversold markets. Okay. But this is going to give us a technical perspective. So how to make these ratio charts to identify overheated and undervalued market and make the decisions accordingly. This we are going to cover in stock market cycles. Then we are going to talk about systematic and objective investing process. So what are the key decisions in investing process and how to formulate rules for those decisions. Then we are going to come to our main technical system, that is a multi-bagger system. So we are going to talk about chart time frames, which chart time frames to use, what are the returns that can be expected on these chart time frames, what is the average duration till what time these basically trends keep on going. Then we are going to talk about entry. So there is standard entry and there are some, so obviously the market is not basically science. There are lots of deviations. For every rule we devise, there is a anomaly or exception where in spite of that rule not meeting, the stock has worked. So we are going to discuss the standard entry technique and what are some of the deviations for entry. Then how to devise initial stop loss. So this is again the ATR comes into picture. We have studied the volatility after this entry is triggered and till what point of time we should wait if the stock is going down. So that is decided by initial stop loss. Then as the stocks in moves in our favor, so how to trail the stop loss. Again here the ATR and Keltner channel is going to be in focus. And last is profit booking. So profit booking decision is made using RSI and Keltner channel. Then we are going to talk about portfolio construction, how many stock, how much capital to allocate to each stock. Then pyramiding. So if some stocks are working better than the other stock, how to keep on adding to that stocks. Then buying in pullback. So as I said, during the trend, there are lots of fluctuations. So how to make use of those fluctuations to basically buy in pullbacks, and then rebalancing of the portfolio. So when the stock goes out, how we are to rebalance this portfolio and enter a new stock in that. Then we are going to talk about asset allocation. What are the different types of asset, real estate, gold, equity, debt, and what are their return profiles, what kind of returns they give. And we are going to talk about strategic and tactical allocation. So in wealth creation, how we should choose the assets and what is strategic allocation, what is tactical. So tactical allocation is basically shifting between the asset classes. So as I said that when market becomes euphoric and extremely overvalued, that time it is wiser to reduce the equity exposure and go to other assets which are little bit stable till that time that down cycle of the market is played out. So these corrections in the market on average last for 4 to 6 quarters. For stock, there is no such rule. Some stocks can remain in the down cycle for a year or decades also. And some stock cycles can have a correction of say 1 to 2 years, and again they can resume the new cycle. So for stock, the down cycle period is not fixed. But on index level, these are repetitive patterns. Generally, 4 to 6 quarter is the standard correction time. After that, again the new cycle start. That is what we have discovered in last decade. So how to shift between assets. Then once you have learned the entry technique, what are the options for scanning these signals? So I will demonstrate the software that I used for scanning. And we will also demonstrate other charting options which are free, like trading view or charting, which can be used for scanning of signals. I have a request here. If somebody is using some other free softwares and he has a good background for coding or scanning, then please let me know, because we want to develop some scanners which can be available to all the participants on free charting applications. So maybe you can get in touch with me afterwards. Then what are the how to basically build this scanner? So what are the rules we have to decide for scanning, that we'll learn in this. How to maintain watch list. So there are going to be hundreds of stocks which will come in watch list. So how to maintain that, and also we will learn how to trim that list to investable number of stocks. So if there are 100 stock, obviously we can't create a 100 stock portfolio. So how to trim that also we'll learn. Then we are going to talk about fundamentals, the debate between technicals and fundamentals, advantage and disadvantages of each. And then how to do basic fundamental check for, say, let's say we have shortlisted the 100 stocks. So if you want to go in details of the 100 stock, we don't have that kind of bandwidth or resources to analyze this 100 stock fundamentally. So we are going to make a template on which we will do the basic fundamental check of this stock. So looking at this fundamentals for 5-10 minutes should make a decision whether we should invest in this stock or not. Obviously, it is not going to be a perfect fundamental check, because fundamentals is a very deep subject. And but I have observed that if we do basic fundamental check, that is enough for the stock once the technical signal is triggered. Okay. And then we'll have case studies, Indian case studies of past multi-baggers. whether this system works in global context. So we will see the US stocks, that same system, because this is a universal system, it will work on all the markets. Because this is a common and repetitive uniform pattern which gets triggered. So we will study in the global case studies whether this system is applicable on US stocks or not. So we'll take lots of examples. And then we'll also have on-demand session if you want to learn certain skill set or certain more market-related techniques, which of course, I should also know that. And if I have that, like I know about Elliott waves, but Elliott waves are subjective, so I just use it as a reference in my investing and trading, not making objective decisions. But if so you have interest, we can have on-demand session on that also.
Thank you for joining me on this introduction to the world of multi-bagger stocks. If you are ready to take the next step towards transforming your financial future, our comprehensive course is just what you need. By enrolling, you will gain access to in-depth lessons, expert insights, and practical strategies that will empower you to identify and invest in stocks with the potential for extraordinary growth. The course also comes with 6 months of support group for solving your questions, queries, and doubts. Don't miss out on this opportunity to enhance your investing skills and build a robust portfolio. Click the link below to purchase the course and start your journey towards financial success today. Remember, the best investment you can make is in yourself. Take action now and unlock the secrets to finding the next multi-bagger stocks. Thank you, and I look forward to seeing you in the course.